Consumer discretionary, best performing sector over the last month, up nearly 9%. A lot of that's Tesla and Home Depot and a few others. But our next guest says despite this recent rally, the power of the consumer is still being underestimated. Let's bring in Mike Vogelzang. He's Chief Investment Officer at Cap Trust. Mike, good to have you on here. What do you think, the market might be missing in terms of the strength of the consumer? Of course, the personal consumption numbers from October certainly look pretty strong this morning.
Yeah, your conversation just a minute ago was really terrific, actually. Plays right into what we're talking about. The fact of the matter is there's a record amount of net worth on Americans' balance sheets, 5 times GDP, which is a record. It's normally around 1 times GDP. So all of the stimulus, all of the market valuation increases, all of the housing increases in values have created this enormous, sink value for consumers to start and actually continue to spend. So, that's kind of a tailwind that I want at my back. And I was on a couple of weeks ago and I was talking about Macy's when they announced, and I think the stock was up like 10% that day. It's given most of that back through some sort of, technical trading and higher interest rate worries. But again, we expect that some of this huge iceberg of savings is going to be melting into what's going on the consumer. That's really the thesis here. It has a lot to do with higher interest rates, which is why what you guys were just talking about was interesting.
I wonder on the consumer. So a lot of people were bullish on the consumer because savings rates were so high during COVID and right. Government transfer payments were so generous. And both of those things are coming back to normal and fading. So I think the big question on the consumer is the consumer resilient enough to face these very high inflation rates into next year with those two factors fading?
Yeah, that's the question, right? We think we're in the decided camp of inflation being relatively temporary. We think by the time we get to the fourth quarter next year, we could be back to the 2% range. So we're not overly worried about it. It's going to have some headline indigestion. I just, look, the issue is 40% of the personal payments that were given out by the government were saved. So it's not only current payments that have to get spent, right? The whole point here is we have this big, huge chunk of savings that's going to be able to burn off. And you see that in some of the attitudes. It's fascinating. Usually when consumers are grumpy, which is what they are now, right? They're unhappy with higher prices, they're unhappy with gas prices. They're sick and tired of COVID, all these things. Consumers are definitely grumpy, yet they're spending like crazy. I don't think we've ever seen that. I don't remember it in my career. And so, again, it's a tailwind when you're looking for where to put your money, what you think about. It's not the only place. You have to be worried about valuation and all the rest. But we just think that that's an underestimated tailwind, to the consumer that a lot of investors haven't really focused on yet.
And I know you do have a few specific names that you like to play this trend. And, just looking at them, they actually have done pretty well, these stocks and the companies, Ford, Williams, Sonoma, and Lowe's. So you're not out there necessarily looking to kind of pick up the dented stuff like the Gaps and the Nordstroms that got hit on results.
Yeah, no, look, winners win, right? We've owned Williams Sonoma for a couple of years, and it's just been doing terrifically well. They've transformed that company to really a 21st century business where they're competing with Amazon, yet with both a retail and an online store. They've done a great job. Ford, we think, we're a little less sanguine about Ford, just given, so here's one worry we have, and that is, I think the Financial Times in London called it potentially the Ketchup Economy, right? Where all of a sudden you keep pushing on this logistics lock up and the integrated, the IC, the chip makers and so on, and all of a sudden they're all going to come at once, and that may happen with cars and automobiles. We could see a huge sort of supply coming on next year. We just think there's a lot of pent up demand. We know the price of used cars is exceptional, so people are clearly looking to buy some new cars. Again, it's that tailwind, right? Get the tailwind right, and then you can figure out the details underneath it.